Hello dear students, welcome to Devika's Commerce and Management Academy. Today we'll discuss about important concept, capital structure. This is important to every commerce and management student. You must know, because when we study, when we talk about any organization, capital is important. Capital means nothing but funds. How do they accumulate the funds? So the accumulation and that structure is, we call it as a capital structure. Structure in the sense, for example, I want capital. I want capital of 2 crores. How do I accumulate? How do I invite the funds? Some are issuing by shares. Shares means capital, preference shares, equity shares I am issuing, and few debentures I have issued, few loans I have taken, like different variations from various sources are there. From which sources, what you have collecting, how you are collecting, that is, we call it as a capital structure. Capital is going to play a vital role in any organization, no doubt at all. Because every organization, if they are able to manage the capital, then they'll be in a very good position. And of course, the capital is depending on the requirement of capital is depending on the organization size and also nature of the business. Sometimes your nature of business is you don't need much capital. Less capital is enough, but you can work out. And size also. So these two are going to play vital role. The company where they utilizes the capital properly, proper utilization, whenever it is possible, then that company will earn profits. When the company earns profits, they'll be in a position to pay the dividend or interest more to the shareholders and debenture holders. Then that's a good company. That is the capital structure we have to study. Excuse me. What is capital structure? In one sentence I can tell you, just easy to remember. Capital structure means combination of all long-term sources. Please underline this point. Combination of all long-term sources. Capital structure, we are talking about long-term sources, not short-term. Short-term means, suppose say 3 months or 6 months I have taken some amount and returned it back. So that doesn't matter at all. But long-term, more than 1 year, more than 5 years, when you are taking capital, then that is, we consider it as capital structure. Okay, capital structure means a combination of all long-term sources of finance. It includes, what are long-term sources? It includes equity share capital, ESC means equity share capital, PSC preference share capital, debentures, reserves and surplus, loans, etc. All these things we consider it as long-term capital. Capital structure means nothing but combination of all the long-term sources. Long-term sources means equity share capital, preference share capital, debentures, reserves, and retained earnings, and also loans, something else you have taken. So these are all long-term loans only. We are talking in capital structure only the long-term loans, not short-term. Are you clear? Now, how do you decide that what are the forms of capital structure? Forms of capital structure. There may be different forms. Some company wants only the equity capital. That is one form. Another company needs, they want preference shares and also equity shares. This is one kind of form of accumulating the capital. That is structure of that company. And another company, they want all these three, preference shares, equity shares, debentures, three they want. This is another type of structure. There is another company, they want to issue the preference shares, equity shares, debentures, and also loans. It can be, so that is, forms of capital structure depends on the organization. How do they want it to accumulate? What kind of capital structure they want? If they want all four, like equity shares, preference shares, debentures, and also loans, when they want all these four, then what is that structure? How much they wanted to issue? 20% equity shares, 40% preference shares, 20% or 10% or 20% of what do you say, debentures, and 20% loans. Like structure, how do they want to? That structure we are going to consider it. What could be the right structure? Which company? So that purpose we say it as a uh, optimum utilization of the capital structure. Before going to that, you must understand objectives. What are the objectives of the capital structure? Mainly remember 2 points only before going to the board matter. Remember 2 points. What are the main objects? Means one thing is that every capital must be utilized properly. It should be utilized properly. Optimum utilization. Second thing is that cost of capital should be less. When we are issuing shares, debentures, whatever it may be, that cost should be less. If these two are utilized, if these 2 points are satisfied, then this is optimum. That is the main objective of every organization related to the capital structure. Anyway, we can discuss here objectives of capital structure, 4 points. First one is that to reduce cost of capital. Just now I told you. Cost of capital should be always less. Less means more comfortable for the organization. Right, cost of capital should be less, and to minimize the risk also should be less. If they issue equity shares, more risk, because equity shares cannot be taken back, it will be always in the company itself only. Whereas if you issue the debentures, only limited in interest rate you have to give, and it will be redempted as per the decided period. Like, you have to think about the risk also, minimize the risk. So that kind of capital structure we want. Another one is that maximum returns. We need returns more. We are accumulating capital, but what about the return? Return should be more, then only you can utilize it. Maximum returns and control over the organization. If proper capital is there, then only you can run the organization smoothly. You need not to worry about at least capital. You have to worry about the organization. You have to worry about the activities of the organization, business and competitors, marketing, advertising, financing, all these things you can worry. You can worry even about the technology. You can worry about the employees of the organization, how they are working. All these things you can worry. At least from the capital point of view, you need not to worry. Are you getting it? That's about control over the organization. These are the main objects of the capital structure. Now we'll see determination of optimal capital structure, or you can say it as a factor influences capital structure. How do you say it? Say optimum utilization of the capital structure. Few points if you understand, then you can say this is optimum structure. What are those few points? First one is utilization of funds. When you are accumulating funds, when you are gathering funds, so that utilization of funds are important. If not utilizing, what is the use of accumulating the capital? Right? So that is why proper utilization is important. Second one is growth and stability of sales. There must be growth in the organization and stability of sales. Growth or stability, these two are okay. Means sales should be always good. If it is good, then only that funds are utilizing properly. If sales are good, you'll get the returns. When you get the returns, from that returns you'll get the profits. From the profits you are going to distribute to the shareholders and debenture holders, either dividend or interest, anything. Everything is interlinked. Are you getting it? So that is why growth and stability of sales, that is also going to make factor. And another one is cost of capital. Cost of capital. Cost of capital is more means risk, not advisable. So cost of capital should be always less. So what is the cost of capital? You are getting it when you are issuing shares or when you are issuing debentures. So that cost of capital also going to decide the optimum capital structure. And nature and size of the firm. Size is big, then you need more funds. So that is going to decide. In the same way, next control over the organization, control over the finance aspects, and control over the all the activities of organization. That is possible when you have optimum utilization of the capital structure. If you have an optimum capital structure, then only you will be able to control. Finance is the main source. If this is not under control, how do you manage it? Are you getting it? So that is by control. And another one is flexibility. It must be always flexible. Capital structure. Sometimes say I have issued 20% debentures, 40% equity shares, and after some period I realized I'm not supposed to issue 40% of equity shares. I want to increase the debentures. Okay, ready. Means that kind of flexibility should be necessary. It must be. If no flexibility, then you have to bear that risk. Tomorrow is uncertain. According to the market condition, according to the requirement, you have to make that flexible. That kind of changes you must make it. That's about flexibility. And next one is requirement of investors. Investors, they need some requirement, like I want to invest. If the investors are having money, then only they are able to invest it. No money, no investment. So that is why, so this optimum capital structure depends on the requirement of the investors. A, B, C, D, four members are there. They have lots of income, they wanted to invest. When they have this kind of requirement to invest, then only we are going to get the capital. Then only it is possible of capital structure. That is why it depends on the requirement of the investors also. And last point, conditions of the market also. Sometimes ups and downs are quite common. Market conditions are always uncertain. Sometimes due to economic conditions, sometimes due to recession, and sometimes globalization, sometimes due to natural calamity. It can be anything, but one thing is, remember, market conditions also going to make the difference. You know, Sensex always ups and downs. Why? Conditions, market conditions. So these are the main factors, or these are the main points you have to remember. So this is going to determine the optimum capital structure. What is the optimum capital structure? Means simply you can remember proper utilization of the accumulated funds, and also cost of capital must be less. If these two are there, then you can say this is optimum capital structure. And how it is deciding? All these factors. Am I clear? Next, we'll discuss about important thing, capital structure theories. How should be a capital structure? Some people say equity capital, issuing equity capital is good, and some people say preference shares is good issuing. Some people say please do ignore all these things, just depend on the debentures. So like different concepts are there. So how, what to issue, when to issue, how much to issue, which is going to give you the proper results. So that we'll be discussing in the capital structure theories. There are different theories, different ways. So I'll give you simply introduction. In depth we'll talk in the next class. Capital structure theory is mainly divided into two parts. One is modern approach, traditional approach. Modern approach, traditional approach. This modern approach is divided into three parts. One is net income approach. Net income approach. This we say it as NI approach also. Net income approach or NI approach. Next one, net operating income approach. Means NOI. NOI, net operating income. Net income, net operating income approach. Third one is Modigliani-Miller. So Modigliani-Miller, MM theory. MM approach also you can say. In short form, MM. So these three comes under the modern approach. NI, NOI, MM. Under the modern approach. Apart from modern approach, we have traditional approach also. We'll be discussing all these things in depth in the next class. Hope you got an understanding about what is capital structure. Right? Want to take screenshot? You can. By the way, are you following properly FM classes, financial management? Yes? Please do mention something in the comment box. Let me read your views also. Stay connected. There are many subjects already covered. And also stay connected and refer the subject well in advance. Before exams, just you have to revise it. Don't forget to share this video. Stay connected. In the next class, we'll talk about approaches, different approaches of capital structure. Good luck.